The global economy is currently navigating a period of significant change, with growth prospects remaining somewhat subdued. This is the key takeaway from the October 2025 World Economic Outlook, WEO. The report paints a picture of a world still grappling with the aftershocks of shifting policies and emerging challenges. The report, which you can access in full, details several key areas. Projections table, a detailed look at the economic forecasts. Chapters, in-depth analysis of specific topics. Statistical appendix, supporting data and figures. GDP growth, an overview of gross domestic product trends. Data tools, resources for further analysis. Videos, visual summaries and explanations. While the near-term outlook has seen a slight upward revision compared to the April 2025 WEO, the overall growth trajectory remains less robust than pre-policy shift forecasts. The global economy is adjusting to a landscape reshaped by new policy measures. Some extremes of higher tariffs were tempered, thanks to subsequent deals and resets. But the overall environment remains volatile, and temporary factors that supported activity in the first half of 2025, such as front-loading, are fading. Specifically, the WEO projects global growth to slow from 3.3% in 2024 to 3.2% in 2025 and 3.1% in 2026. Advanced economies are expected to grow around 1.5%, while emerging market and developing economies are projected to grow just above 4%. Inflation is expected to continue its global decline, though with varying levels across countries. The United States, for example, is predicted to experience inflation above target, while other regions may see subdued inflation. But here's where it gets controversial. The report highlights several downside risks. Prolonged uncertainty, increased protectionism, and potential labor supply shocks could hinder growth. Additionally, fiscal vulnerabilities, potential financial market corrections, and institutional erosion could threaten stability. So, what's the solution? Policymakers are urged to instill confidence through credible, transparent, and sustainable policies. This includes fostering trade diplomacy alongside macroeconomic adjustments, rebuilding fiscal buffers, preserving central bank independence, and redoubling efforts on structural reforms. Let's delve deeper into some of the key chapters. Chapter 1, Global Prospects and Policies. This chapter emphasizes the slowing global growth and the challenges posed by increased protectionism and fragmentation. It also highlights the expectation of declining global inflation, while acknowledging that it will remain above target in certain countries. The chapter reiterates the downside risks, such as prolonged uncertainty, escalating protectionist measures, labor supply shocks, fiscal vulnerabilities, and financial market fragilities. It also points out the potential threats to macrofinancial stability from an abrupt repricing of tech stocks and the importance of preserving the independence of key economic institutions. The key takeaway is that policymakers must restore confidence through credible, transparent, and sustainable policies to navigate the global economy in flux. Chapter 2, Emerging Market Resilience, Good Luck or Good Policies. This chapter examines the resilience of emerging markets in recent years. It suggests that while favorable external conditions, good luck, have played a role, improvements in policy frameworks, good policies, have been critical. Better monetary and fiscal policy implementation and credibility have reduced reliance on foreign exchange interventions. The chapter concludes that countries with robust frameworks are better equipped to handle risk-off episodes, while those with weaker frameworks risk higher inflation and output losses. Chapter 3, Industrial Policy, Managing Trade-offs to Promote Growth and Resilience. This chapter discusses the increasing use of industrial policy by countries to support strategic sectors and firms. It acknowledges the potential benefits, such as boosting productivity and enhancing resilience, but also highlights the trade-offs. These include potentially higher consumer prices, substantial fiscal costs, and the risk of negative cross-sector spillovers. The chapter emphasizes the need for careful targeting, strong institutions, structural reforms, and sound macroeconomic policy for effective industrial policy. And this is the part most people miss. The report also includes a statistical appendix, data tools, and videos to provide additional context and analysis. What do you think? Do you agree with the report's assessment of the global economy? Are you optimistic or pessimistic about the future? Share your thoughts in the comments below.